Hey, Puppy Trades! We're building up some great momentum in the algorithm. So please like the video, subscribe to the channel. I'm going to try to reward you guys for a great performance last night. I'm going to give you guys a live trade update. How I make real money, real time. It's not investment advice to you. It's not investment advice to anyone. If anything, it's just what I am documenting for my own personal investing purposes. I am a professional investor. I really do this. And this is no different than the same reason actors, football players, baseball players, softball players, they all watch film of themselves. They want to make sure they understand their thought process. It's extremely, extremely helpful. And if I ever actually did have to give one tip to someone who wants to be like me, they want to be a professional trader, they want to be a professional investor, start making film. Just like this, just like every football player does, just like every baseball player does. You're not going to find a single professional athlete or actor that doesn't watch film of their thought process and their technique. So, if we keep doing well, I'm going to do a full update of NVIDIA. Okay, a full update of NVIDIA in my position. Right now, I'll tell you guys, I've been buying roughly two parts, or sorry, three parts NVDY. The Yield Max NVIDIA Option Strategy ETF yields pretty nicely, and three parts that and two parts DIPS. So this isn't one that I can take a completely unbiased strangle or short strangle on like Coinbase or Tesla. Um, but there is other ways that I've been playing NVIDIA. I've been pairing it with other ETFs. I'm very happy with some of the correlation analysis with YMAG and XDT. So I've got a lot to get into with NVIDIA. Give this video some likes. Keep growing my subscribers, and we'll certainly get into that. I want to reward you guys for yesterday. I'm gonna give you guys a live trade that I made today. It's not don't follow this. Don't do anything of that sort. I just want to show you guys my thought process. Why I bought leap calls on Fubo today. I'm not even gonna tell you guys what I bought. I did buy a good amount of time though, and I was a little out of the money. So what I'm looking for right here from Fubo. What is Fubo? Whenever a stock has a goofy name like this, anecdotally, I'll say I'm suspicious. I've noticed these quants they give, or these MMs, they give the best opportunities, the dumbest names. Bitcoin, that's probably the best example to me. A lot of these stocks that are named after dogs, right? For some reason, as soon as I said that, I couldn't think of any more investments that have really dumb names. Google, right? That was when Google came out. It just sounded so dumb. Facebook sounded so dumb. Bitcoin still sounds very dumb. Fubo TV offers sports first live TV streaming platform. Offers sports first live TV streaming platform as well as news and entertainment content. Fubo TV is based in New York, the United States. Not much information there from bar chart. This is not a financially healthy stock. If we look at this, the interest coverage ratio is negative 20. The profit margin's negative 20. Return on assets negative 14. Return on equity negative 66. This company has very serious financial problems. It only has 39% institutional shareholders, and insiders can't really afford to own much. No dividend. I mean, I really did not make this based on anything besides options activity and Elliott Wave. So that's fun. What was the options activity? I don't believe it's on it anymore, but I did benefit from looking at the law. Oh, I think I benefit. I'm going to benefit. Here it is, right here. The 1.50 long straddle was being purchased. I also bought shares of medical properties. We can get that one in this video, maybe too. From this week, I bought medical properties this week. I averaged down into that. So Fubo, they're buying the 150 strike straddle on Fubo TV. So we're gonna get into what's that mean? I mean, really, I think a married put is better than a straddle. I didn't take a straddle position or anything like that. Oh no, they took away That's why I shouldn't have done that. But it doesn't matter because I marked it up. I marked it up beforehand. I'm very smart. Yes, I marked it up beforehand. Woo! Wave one, large wave one. What's the straddle? They're buying the 150 strike straddle. That basically means, I don't want to say basically. They've been buying straddles on Fubo for a long time, all the way down. I suspect now they're buying straddles on the way up. Why I say a married put is better than a straddle. They're using a married put would be if the 150 strike put was bought and it had a delta of negative 35. 35 shares of Fubo would be bought. That's called a delta neutral position. That has less theta decay than a straddle, which is where the 150 strike call is bought instead of 35 shares to make it delta neutral. So there's less theta decay, and the MMs are more likely. They can always just exercise the call options, and they save a little money doing that. But they can also just use the common stock, not have to worry about exercising if there's extra cost or tax problems associated with that. Anyway, that also just helps them accumulate all the supply all the way down. So Fubo TV, large wave one, subdivided into 1, 2, 3, 4, 5 waves. An A, B, C correction completes this wave two, and then a wave one and a wave two forms from this low. I am not going to sell this position, but I suspect 1.12 will hold. Above 1.12, I like to trade and invest when the market's open on an empty stomach. Wave one, ABC wave two. I'm looking for a wave three to not get broken. I'm going to keep holding this position. I think this is very clearly five waves. Look at this RSI. I really made this position. I invest based on this stuff all the time. I really took this position based on this RSI right here. Wave one, two, wave three makes the highest high on the RSI. There's a shallow wave four. Wave five makes a higher high in price, but it ends with momentum divergence. That's why I'm very confident that this high is going to be broken of 3.87. These are going to be deep in the money. I bought an odd number, so when they're up 150%, I'll sell a third of the position, and I can remove all of the original risk. The other position that I bought today was before BABO's ex-dividend date. Before BABO's ex-dividend date, this is the Alibaba Yield Max synthetic, out-of-the-money synthetic covered call strategy ETF. What BABO does is they buy an at-the-money call, and then they sell an at-the-money put. Say it expires in 6 months. So that gives them a delta exposure of 100. Against that 100 delta, they sell an out-of-the-money call. So using those options to get that exposure, that's called the synthetic part. The fact that the option they're selling is out of the money is the out of the money part. Out of the money synthetic covered call is covered because they have a delta of 100. So this yields very nice. That doesn't mean it's good. There's a very easy, simple way to define the word scam. It's by taking the ETF and seeing what happens when it's blindly averaged into. It doesn't look like BABO is a scam despite the yield, 55% total return. Another ETF that was not actively managed, KLIP, also allowed me to collect covered calls on China KWEB for a very long time. That was KLIP, blindly averaging into KLIP, not nearly as good as BABO so far. Past performance does not indicate future results, but KLIP is doing this because they're underperforming because they're not actively managing and actively raising these strike prices and using the synthetic options the way that YieldMax is. So it doesn't look like YieldMax is scamming people, at least not with Babo. So I'm a big fan of Babo. I've been buying. I actually own 50% Alibaba. I own 50% Babo. I'm buying more Babo than Baba. And so I think this is a large wave one and ABC wave two. And from this low, 1, 2, in blue, large wave 3 is in progress, subdivided into 1, 2, 3, 4, 5 waves. So I'm looking for higher highs to be made, followed by shallow corrections, followed by higher highs. I believe that's going to be very good for BABO. It's going to allow me to collect lots and lots of option premium while there's a bias to the calls. That's called a call skew. It's going to allow me to collect this juicy premium and also have exposure to Alibaba ADRs, nice diversification, and a good amount of upside and a good amount of value backing. We look at Alibaba, unlike Fubo, we're going to see much better numbers. We're actually going to see a dividend in this stock. Its interest coverage is 13. We're going to see very nice return on assets, nice profit margins. We're actually going to see it's only 73% above its book value. So it is a little bit of a growth stock. Low institutional shareholders because it's a foreign ADR. Alibaba Group Holdings is one of the leading e-commerce giants. So, there is this election idea. I've talked about Co-Diagnostics. Everyone probably understands what I'm saying there. Over the last few years, the company has transformed itself from being a traditional e-commerce company to it's a conglomerate now that has businesses ranging from logistics to food delivery to cloud computing. So very much like Amazon, I've made a good amount of money on AMZ and AMZP, collecting 2 dividends a month. Plus, I believe that Amazon is now in the YMAG ETF. So that's Alibaba. I just wanted to give a little more supporting evidence. I went over KWeb last night, but I do think that KWeb is actually a little more aggressive. And so I gave the more conservative version with Alibaba. With KWeb, I believe this is a wave 1, 1, 2, 3, 4, 5 wave subdivision, an A, B, C correction, where wave B is connected with the A, B, C expanded flat. So this is wave 1, this is wave 2. I suspect the large wave 3 of wave 3 is in progress, but if we look at the subdivision, it doesn't look like 1, 2, 3, 4, 5 waves. I say that because wave 4 breaks the wave 1 high pretty strongly. So that would make it not a wave 4. It's also not a sideways bull flag. It's kind of this steep correction very fast. That matters because in Elliott wave 4 is more sideways, and it usually doesn't crush the wave 1 high like this. So this is more of a wave 1 and a wave 2. I'm looking for a wave 3 of wave 3 to be in progress for KWeb. That would support these higher called premiums for Alibaba as well.